Hello, this is Martin. Welcome to seekedge, the channel for learning about investment and trading. Welcome again to the pre-market analysis show for June 18th, Friday 2021. So in this show, we will be trying to look at what happened in the market the previous day and what we can look forward for the June 18th. Let's see what was the price action for yesterday. So Nifty had a green candle and it almost looks like an inverted hammer, indicating that the bulls prevented the bears from pulling down. Bank Nifty had a dodgy candle. Again, dodgy indicates indecisiveness. Let's see what we are talking about. So that is a hammer. So it's not a fully ideal hammer. Ideal hammer would have little more less wick on the downside, right? So this is a green candle, as you can see. It's a hammer, so it shows that it tried to go down, but bulls pulled it up again. So there was a big fight between the bulls and the bears, and bulls tried to all the market went down, the bulls pulled it up, right? It also indicates there is a pressure from the wick. Long wick is indicating that the market dipped down, and then there was the bulls tried to bring it back. That's what the candle clearly says. Bank Nifty has a doji. You can clearly see that there is a doji. There is indecisiveness. Whenever the index or the market does not know whether to move up or not, the majority participants is in a state of indecisiveness. Indecisiveness most of the times could turn out to be bearish also. Now let us see what happened in the market intraday. Within the 15-minute chart, if you see, this is the Nifty's. You can see that the market gapped down and then recovered, and then again went down, then again attempted to recover, and then went further down. So this is kind of an M pattern that you can see. So this is something similar to an M pattern. So it is trying to go up two times, double top, and then so intraday it's bearish. Whenever this so that is the action that happened. You can see that exactly the same action happened in Bank Nifty also. You can see there's a big gap down, 400 points, recovered, then again an M pattern. That's what we mentioned here. Nifty had a 100-point gap down and then recovered, and then 100-point again up, and then same 400 points, 300 up, and again down. So that was the action. Remember, yesterday was a major event, US Fed meeting outcome day as an expiry day as well. So no wonder you see such kind of actions on such a day. Now let's see the support and the resistances. I have summarized it here, so you can see that the Nifty, the first support 15600 is not broken. It came near to that today, but it's not broken. That would be the first support. Second would be 15500 to 15350. Third would be 15,000 to 15,250. This is not changing because the market never went after it was marked yesterday. Resistances can be seen at 5,900 and then 16,000. That also does not change. So 15,600 is what you see. The support is a previous support area, and the FIB 23 and the moving average and the previous resistances both forms the support 2, and the FIB 38 and the FIB 50 both forms the support 3. So resistance 1 for the Nifty is actually ATH at 5,900, and rounding number 60,000 is the resistance 2. Bank Nifty similarly, if you see, you can see that 34,350 to 34,550 band would be the FIB 23 and the previous support, previous swing low, and the previous resistance both. So that's the first support. Second support would be 33,500 to 33,750, which is the FIB 38 and the previous resistance. Support 3, 33,000, FIB 50 and the previous resistance. So no changes there because that supports are not broken yet from only yesterday's action. But there is a small change in the resistance area. 34,400 has become the new previous resistance area, and the resistance 2 is remaining the same, 35,850 previous resistance, and then 36,500 is all-time high. And after that, the actually there is a correction here. 36,500 is not the all-time high. That's the resistance area. All-time high is at 37,700, which is also fourth resistance, you can say, upwards. Let's see that how it is marked in the charts. For the Nifty, you can see that resistance is there in the all-time, in the rounding number, right, at the all-time high levels, right, and then you have supports, support, right. This is the fib support, the band that is comprising of the previous swing low and the fib, again the fib 38, fib 50. So these are the levels that we talked about for the Nifty. Bank Nifty, resistance the all-time high, below that you have previous resistance area, below that you have, right, the previous resistance, and then supports you have where Nifty has stopped now. That will be the first 34,600 area. Below that you have support 2, support 3. So this is matching with the, so you can study these charts if you have any confusion on the levels that's mentioned here, right. Let's look at the momentum and the trend now. The Nifty momentum continued to be the bullish zones, but it is falling, right. Now another interesting thing, 7-bar bearish momentum divergence, which we identified 2 days back, has fully met its target. Yesterday half, and today it's fully, the target is matched for the bearish divergence of the momentum. Now the Nifty bullish positive direction that was diluted now, since the target of the bearish momentum is over, it could bring the market up if it is moving up, if it is moving above the previous day's candle high, if it is confirmed basically. So momentum divergence sometimes does not work, sometimes no. So it's only on confirmation that we can proceed to take a long portion. This is not for intraday portion, it's for taking positional or swing trades. If you get a confirmation of the divergence, we can go long or short accordingly. This bullish momentum, now there is a chance that it may bounce and then it may accomplish the target of the this one moment of the divergence. So Bank Nifty momentum, it remains sideways and it is falling also, right. It's in the sideways now, right. Nifty managed to be still in the bullish zones. We'll see both of that. So what do they say? So this is it is falling. Left hand side you can see that it's a Nifty, right hand side is Bank Nifty's momentum. You can see that it is already in sideways and it's falling. Both are falling. So the moment, there is no momentum in the market. Now this is the divergence that we talked about, right. What you see on the top that is marked, right, that is a bearishness, and that came down. That's why market dipped in the last 2 days, met the targets. Now we have a new bullish divergence which could move up. Now if the all-time high is met and then it goes up, then it is the PR, the positive reverse divergence that worked. Now the trend, if you see that, you can see that there is something new that has happened today. First time the momentum of the Nifty moved to the bearish zones, but the strength is less, and the crossover of the DMIs happened, positive and the negative. So it is in the bearish zones moment. Bank Nifty already is in the bearish zones. We are seeing that, and strength is less. Both. So green is going down. So let's move to the open interest analysis and the volatility. Right. Just to wrap up, so we have seen 3 things. We've seen the candlesticks and the price patterns, how the movements happened yesterday. We have found the support and the resistance levels based on which could help to go ahead with the trading for the next day. Then we saw the indicators of the ADX, which is a trend indicator, and then momentum. So price, patterns, momentum, and trend is what we are seeing. Now we are trying to relate the data with the open interest analysis of the derivatives, the futures and options, and the volatility also. So open interest analysis is showing that the support level for the Nifty is 15,000, next is 15,500. So that is where the if at all there there is a movement downwards that happens, it takes about this first, the highest put writing is happening at 15,000, then it's 15,500. Similarly, open interest resistance, the highest call rating is happening at 16,500, and then the nearby open interest resistance after that is seen at, highest is seen at 15,800, then 16,000. So this open interest data cannot be fully relied upon right now, because the new expiry begins from tomorrow. So from tomorrow only you can see how the action is happening for the month end, the final week expiry, for the monthly expiry. Now there is a correction there. The PCR rates that is shown here, 0.82 and 0.62 is not correct. The PCR is 1.05 and 0.74, as it is written down. Not so what? No, just ignore this. For the future build-up, you can see that the Nifty has done a long unwinding. Long unwinding is people who have gone long has gone the other side. That means it's slightly bearish, right? So Nifty is not fully short build-up that happened, but moving towards that. So it has turned Bank Nifty while it is already, no, it was purely bearish, right? Now when we talk about volatility, right, so we can clearly see here that the Bank Nifty, the Bollinger Bands is a tool that is, in some way helps to know about the volatility, the deviation from the center point, right? How far the Nifty fluctuations and the movements range can be, right? So here the Bank Nifty, interestingly, it shows that there is skews happening. You can see that the bands of the Bollinger are in a contraction mode, right? While Nifty, it is still in expanding mode. Here it is a contraction mode, which means that the Bank Nifty is going to consolidate at this, at these levels for some more period of time, right? So the range of the movement of the Bank Nifty may be limited at least for a short time. So the India VIX is showing 15.23. That means the fear and greed index is slightly risen up from the 14.6 kind of levels. So there is some kind of fear that has come, probably because of the event that happened, the event outcome, the Fed meeting outcome. Okay. So IV is greater than HIV, but the problem is the IVP is very low, right? Unless and until the IVP is increased to higher levels, it will be difficult for option sellers to trade in stocks of the index, right? So this is the open interest that we saw here, back here, right? You can see that the heavy put writing is happening at these levels, right? Which is at level 15,000 is where the highest put writing. That means the market can fluctuate between these two levels, right? 16,500 to 15,000. That's a very huge range, right? But the nearby range, if you see 15,800, 16,000 and 15,000, 1,000 point range, maybe where the action is going to happen, right? Similarly, Bank Nifty, you can see that, right? What is the range of Bank Nifty, right? So you can see that 35,000 and 34,000, right? That is the greens, so right, 34,000 is where the 35,000 is where the resistance is seen, and 34 is where the support is seen. So the battle will be between these two places as per the option support and resistance level, option chain analysis is indicating that, right? Now, yeah, I just wanted to brief upon a small expiry. So an actionable brief that I mentioned in the yesterday's call, that I suggested that since in expiry 30-day case, that iron fly strategies and options, if you apply, it may work out, right? But yeah, and accordingly I had posted in my blogs, seekedge blog, the link of that is given in the video description itself. So wherein I had put the strategy details also. Basically it is a 17 June the expiry iron fly at 15,750 for the Nifty. The risk reward was 1:3, but still I took the 15,750. I think the closure happened 15,700 nearby, right? So the lower break-even point was few points away. So it was a happy loss since the risk reward was very less, very good actually. So that loss was not a big deal. That was a very small loss only. But now iron flies normally work for most of the time. If it is taken at after the market is settled around 10 or 11, on an expiry day, and fly normally works. If you take a and fly at the ATM straddle and then hedges, if you do that, normally works. I just wanted to brief on that. So I'll be posting the expiry trades and other potential actionable trades also once in a while in this blog. So check out that blog also if you're interested. Now the FI, DI, and actually sold, right? Means the FI sold, it's almost same quantity as what it had sold yesterday also, I think 879, and DI is bought very small, right? So FI selling is concerned again. Probably it may be related to again the Fed rebalancing of the funds, Fed related fund rebalancing, I would assume. So the USD INR rupee has, so the USD INR, it's very interesting. Data is there today. The charts are showing that USD INR. This is the weekly chart of USD INR. You can see that there was a big breakout of the channel of the weekly channel, but it failed and then fall down the channel again. Now once again that breakout is happening from the channel, and today's candle, if you see, it's it is a wide range big candle. So I will mention here, USD INR is the currency pair that is traded in the NSE, right? So it is showing that the rupee has weakened for the dollar strengthened, right? So wide range bullish breakout candle, right? The channel breakout failed and then it is again trying that, right? Resistance can be seen at 74.35 and 75.55. Right now it's 74.23. So there is a resistance immediately above that. Then after that it's far away, 75.55. So you can see that the levels can be seen here. So there is a resistance probably here. It is actually at a resistance area. It breaks out, then here you may have resistance. But one thing notice is that it is RBI controlled, central bank controlled. So it is based on the fundamentals. But as a technical analyst, we should look at the charts. Charts is showing that there is very good momentum and trend back to bullish days with very strength, right? So USD can be used for with derivatives. All the bullish strategies for the options can be applied there for the shorter time, since bullishness is very clear and evident. Now gold also has got a good chart. Look at the gold chart. The weekly, this is the weekly for the gold. You can see that it had a weekly channel breakout which failed and then fall down back, and it is falling down. Look at 1 week's candle. It's a huge fall. The daily on the right hand side, if you see, it is 4, 5, 6, 3, 4, 5 big long wide range bearish candles, indicating that the breakout or the up move of the gold is, or at least for a short period of time, right? Because the support level of that support level is also broken, and then you have support levels, 2 support levels below that, which is too far, right? So gold is going crushing, right? You can see that next 1678 and 1759. Right. Now global markets, the SGX has recovered slightly the time of recording. US markets also, the Fed event impact is digested, I believe. Nasdaq has recovered. Indian market did not react too much, probably because their experiment did not react. Did not fall down more than max 100, not too much. Now that's all I have. So let's try to wrap up and see if there is any actionable. So the Fed event is coincided with the expiry. I forgot to mention that. So Fed event didn't impact the market much. Probably that is due to the expiry. Could be a reason. We'll come to know later tomorrow. But is at a very good support levels. You can see, right? There is a bullish divergence at the support level. Bullish divergence is there. We discussed about that on momentum. So and the support levels, both of them is positive. There is a chance that it can bounce from the 15600 levels. Because we already had a small correction, decent correction that happened, and then there is a chance. But the trend indicators are turned bearish. Nifty has also moved along with bank in the bearish zones, right? Bank Nifty is showing consolidation. It is dropped off from the moving average. It is not having momentum or trend or anything. So it's consolidating. All this is, the reason for cautious, to be cautious, and not to go aggressively, long. Why data? As I said, no, it's not fully clear because tomorrow is the first day of the last week's expiry starts. So, so it will be clearer from tomorrow's option chain analysis more as to where the derivatives data, price movements happen. Professional traders should, as I usually mention, may not do anything unless at least 15,000 levels are not broken. That's all. There's no reason to do anything. Intraday players or traders would have to purely do it based on the price actions. So tomorrow is Friday, so option sellers may not benefit because decay will be the least. Yeah, so there's not much actionable, and other than watch the price action for tomorrow and then trade accordingly, right? Since the support levels are there, there is no urgent need for going short unless there is a confirmation at least one, two levels of supports are broken. There is no need to panic, right? Because it's a buy on dip, market. So even if it corrects, it may, bounce back at the support levels. Right? That's all I have. Happy trading, happy learning, and once again, please subscribe. Request you to please subscribe and hit the like button if you like, and also leave a comment on how we can improve, the video content. And thank you.